Trading forex, will never need no record deal. Making my own investment, market printing me money.
Peace, guys. Welcome back to Zen's FX Hub, where fundamentals is simplified. And in this video, I already did this video, but I decided to redo it in slideshow form because I feel like it'll be easier for you as the audience to gather the information, take some notes and stuff like that. Okay, so we're gonna go ahead and jump right into it. Geopolitical risk is back in focus, right? We got Trump, we got Venezuela, we got Russia, we got Ukraine. This is all at the frontier of, the headlines right now, okay? But one thing I want to make clear, okay, is we have headlines and then we have what's going on in reality, okay? Headlines equal noise, okay? Headlines is very distracting, okay? Pay attention to policy and control, because that's what actually move the markets, not headlines. Markets move on control, where capital is flowing, positioning, and again, not headlines. When something is dominating headlines, like you see something trending so much, smart money isn't following that. What they're watching is where the volatility is going and where policy is flowing after whatever it is that's going on, okay? So when it comes to Venezuela and Trump, right, this is much bigger than oil, right? Most traders see oil. That's what they think about, right? Trump is in control of oil, right? What the market sees is the future energy leverage, right? Venezuela is a strategic energy backup for the U.S. This was a leverage play, okay? This is what I want you guys to focus on. I want us to focus on the future and where this is going to take us and not where we are right now. The U.S. controlling Venezuela means that they have control over future supply, not today's barrel price, okay? Markets are not betting on the movement of oil today. They're betting on the control that comes after. Like, what's going to happen with oil moving down the line? Like, what is Trump going to do with these oil prices? And there are things out there that's already saying that he's gonna he's gonna use some of that money to pour back into the U.S. He's gonna use some of the barrels of oil that he's selling to pour into the U.S. to pour into taking care of Venezuela as well, right? So you have to remember, energy is power, right? Without energy, everything that we do will be non-existent. Like, we would not be able to do anything without energy. So this is why this is super duper important, okay? So when it comes to this, don't just think of what's going on right now. Think of what's going to happen in the future, okay? Russia and Ukraine, right? During the new year, Russia struck against Ukraine, and then literally like 2 days after that, we had the United States strike against Venezuela, okay? So as long as risk stay elevated, this will prolong certainty, okay? So as long as there are wars going on, conflict going on, the uncertainty remains high, okay? Unresolved conflict make investors turn towards safe haven assets, risk-off assets, in other words. And just like a key reminder, markets are not trying to predict when a war is going to end. They're just trying to say, okay, there's a war going on. There's conflict going on. How can we position ourselves to make money, to capitalize off this as it continues to drag on, okay? So the four risk-off assets is the U.S. dollar, the yen, the Swiss, and gold. This is where money flows when we are in a risk-off environment, and that's exactly where we are right now. So gold, the real driver, the price of gold is telling the real story, okay? This isn't fair buying. What we've seen in the last few months, the last few years of gold, this is not about fair, okay? Gold isn't rising because traders are scared, because investors are scared, right? They're rising because governments have reminded the markets who's actually in control, which is sovereign risk. And I'm going to give you an example of what that is. Back in 2023, when Russia decided to invade Ukraine, the U.S. froze roughly $300 billion worth of Russian central bank assets, right? And when that happened, a lot of countries seen that and was like, damn, like, if the U.S. can do that to Russia, why can't it do it to me? You know what I'm saying? If we decide to invade a country, or if we decide to not comply with the U.S. rules, that means they can freeze our assets whenever they want. So when that happened, they started to buy up gold because it started to make them see that they cannot trust the U.S., right? And sovereign risk, in simple terms, all it means is that it's the risk that it's the risk of governments being able to change rules in the middle of the game. Like that's not like fair. That's not cool. You know what I'm saying? And a lot of countries didn't fuck with that. So that's why they like, you know what? We got to dump our money in a place where it's protected, which is gold. Okay. So this is why gold was being bought up, right? It's no one's liability, right? Gold is not a liability. You know what I'm saying? Like, it's not something that you if you have physical gold and you own physical gold, it would never be a liability. If anything, it would take care of you and your family for the rest of for your life. Like, you'll be set no matter where you go, right? It's something that cannot be frozen with the click of a button. Okay, like how the United States did to Russian central banks, and it doesn't depend on trust, right? So gold equals insurance against political control, which means overall meaning protection. Like, gold keeps people protected. Again, when the United States did that to Russia, that showed other countries that the United States cannot be trusted, and like I said, gold doesn't depend on trust. So this is why a lot of countries started to buy up a bunch of gold. And before I continue, I did have this up in the last video. I'm gonna pull it up for you right now. China buying gold chart. I want to share this with you, right? Because this is actually a physical representation of what I'm talking about. Okay, where's this chart at? This one right here. This one is not blurry. So as you can see, over the last few years, you know, China has been buying gold. But look at 2025. It has been. This is not by accident, right? This is purposely done. Okay, so this chart right here just supports everything that I'm telling you right now in these moments. All right, so let's get back to the slideshow. Okay, so when it comes to silver, right? Silver is affected, right? Silver is just like gold, right? But it's more volatile than gold. But it still has a reason. It still has a place on the chessboard, right? Geopolitics, right, affects industrial and monetary demand, right? So being that the U.S. is in control of Venezuela right now, it has control over their commodities, which strengthens long-term the demand for alliances and trade leverage, right? So this will pretty much, in other words, what I'm trying to say is that being that, like, again, the U.S. created leverage for itself by taking over Venezuela, and being that it has control over their oil, they also have control of their commodities, right? So people are seeing this as a play of, okay, in the long term, gold will continue to go up in value, silver will continue to go up in value. So this is why why I feel like, and this year and the upcoming years, we'll actually see silver possibly hit $100 an ounce or even $200 an ounce. Okay, so let's go ahead and move forward. Right now, the way this plays out when it comes to the U.S. dollar, right? This play that Trump did for the U.S. is quietly giving it strength, right? The dollar can gain strength in the long term, in my opinion, because of the support that it has now, backed by the energy and the trade settlements, right? Not even now, but just overall, okay? Because majority of trades cannot be done without the U.S. dollar, right? The system is the way the system works when importing and exporting, that's still connected to the U.S. dollar. So certain plays cannot be done without the U.S., okay? And the fact that, we have not we, but the United States have control over Venezuela. Who knows what country is going to be next? What assets we're going to be able to capture and have under our control, right? So the U.S. is now in control over roughly $17 trillion worth of oil and $22 billion worth of gold, just by taking over Venezuela. So again, remember how I was telling you in the beginning of the video, the markets is thinking about the future. What is this going to do? Where is this going to lead us into the future? Not what's going on right now. So what other country, like I just said a few seconds ago, what other country can be up next? What other country can be controlled by the United States? Think about that, right? Where's this leading leading us to, right? So even though some countries want less exposure of the US dollar, this environment slows down de-dollarization more than people think, because this is actually making people need the U.S. more than anything right now. Like, it's kind of like if I'm a farmer, right, and I have chickens that lay eggs, and people need eggs, right? the more chickens I own, the more eggs I can produce. So people gonna have to come to me, right? If I go around taking other people's chickens from their farm and bringing it to my farm, those people, they're gonna have to come to me to get those eggs. So this is exactly what where we're headed. You know what I'm saying? In my opinion, I wouldn't be surprised if we see another country get taken over this year. Wouldn't be surprised. Okay, so how this affects the forex market, right? Start with USDJPY, and then I'll talk about the slideshow. Then I'll hop over to the charts, right? So right now, when it comes to the United States and the yen, it's about risk versus strength, right? Right now, we are in a risk-off environment. Like I said earlier in the video, the four assets is the yen, the US dollar, the Swiss, and gold, right? So right now, when it comes to USDJPY, we have two safe haven assets going up against each other. But in the short term, I could possibly see the US dollar gaining more strength because of what's going on, like what Trump is the position Trump is putting the United States in. So this could kind of give, the United States a lead, right? So when it comes to the chart, right, I could see movement going to the upside, but in my opinion, it might just move sideways or head back down in the long term because we still have the other narrative of, and if you go watch this video, sorry, the dog is barking in the back. I apologize. If you go watch this video right here, 2026, my outlook, we still have labor, we still have inflation at the forefront of what's going to move the markets this year. So this is why I say in the short term, we could possibly see it go up, but then actually go down, because if the Fed continue to do rate cuts, that's going to weaken the dollar strength. Okay, so going over to the charts, if we look at USDJPY, like I said, in the short term, I could see it possibly going up, which we have been doing. We've been shooting up, but overall, long term, as a position trade, I'm looking for it to head back down, and if we break below 155. I'll be willing to get in for this trade and swing all the way down to 140. So right now, I wouldn't be surprised if we come up and maybe retest 158 or even come up to 160 and then shoot back down. So as of right now, I'm not trading USDJPY. I'm just on the sidelines looking. Okay. Back to the slideshow. Euro USD. Now Europe takes the hit first, right? Because Europe imports majority of their energy, so they have to buy their energy, and to make their country run, they have to go outside of themselves to get the things that they need to make their country run, pretty much, right? They closest to the conflict, so it's the war still going on between Russia and Ukraine, right? They have no control over their supply, and money leaves Europe first during risk off environment. So as soon as uncertainty happens and we go from risk on to risk off, and then foreign investors start to take their money out of Europe, and they start to dump their money into the four safe havens that I mentioned earlier. So in my opinion, I see EU being bearish as long as we stay in this environment. But again, if we have the United States doing rate cuts and we have Europe not doing rate cuts, and they're stabilizing and they're not doing hikes or rates, if you compare that to, then it's like, okay, I could see possibly buys going on in the future of for EU. But as of right now, I see it being bearish. And if we go ahead and pull up EU, that's exactly what's going on. I have this range right here. I have this range because I just feel like we just been stuck. So if we come down, and we come down and we break below, obviously, I wouldn't immediately get in for a sell, because at the end of the day, it can just wick, like how it did over here, wick me out and then come back and just trade within this range, right? I would actually need a break of structure below here, which was the last higher low. So it would have to break structure here before I even look for getting it for sales. And the same to the upside, it can just wick up like how it did before, and then just come back into this range. So what I'll have to do if I'm looking for buys is I would have to see a nice strong break, possibly a retest to this range box, and then a continuation. So as of right now, just like UJ, I'm on the sidelines when it comes to EU. Okay, moving forward, Euro JPY right here. This is the best trade for me right now, right? Because basically what I said in the last slide when I was talking about EU. So we're in a risk-off environment. We have risk-off equals yen strength. Risk-off equals euro weakness, right? So in my opinion, bearish, right? As long as we stay in this environment. And not to mention, I forgot to include this in the slideshow, but we have the BOJ, Bank of Japan, actually looking to do rate hikes. So rate hikes actually attract foreign investors to want to dump their money into that country that's doing rate hikes, right? So in my opinion, I can honestly see, and also going back to UJ too, I could, like, in the long term, I could see, maybe the yen possibly outperforming the United States this year when it comes to just rate decisions alone. Okay, I can't factor in anything else that's gonna happen. Like, I didn't know what this was gonna happen with Venezuela and Trump and stuff like that. So any surprises that come up, I just have to take it as it come. But speaking of data wise and just going off inflation and interest rates, the yen should have a pretty great year. So this is why I'm bearish on EJ. And if we go look at EJ, I'm actually, this play it could happen either today or maybe tomorrow. But this is a trade that I'll be looking to enter on. Like, if I go to the daily time frame, I'm waiting for a break of structure at this last higher low. And once we get a break and a nice close, I'll be looking to enter. And I'll be taking this, as a position trade, because as long as we stay in this environment, like I said, I believe that EJ will continue to shoot down. Okay, so that's what I'm looking for with this. Now on the other end, we could possibly shoot up and maybe respect this 186,500 level, maybe 188. But in my opinion, based off what we have, the data I have right here in front of me, I think that EJ is more bearish than bullish in my opinion. Okay, and when it comes to CAD JPY, so we have oil versus fear. Okay, oil because Venezuela and all this stuff like that, but Canada is a big oil exporter, right? So that gives Canada strength. Okay, fear is obviously it helps the yen because it's risk off, but in geopolitics, right, fear usually wins. So pretty much, like, when it comes to CAD JPY, I can possibly see as of right now the yen being stronger than Canada. So I can see CJ shooting down, but at the end of the day, we have to keep in the back in our mind, like, is if we go take a look at the oil chart, right? This play, right? What's going on right now when it comes to oil is we're definitely going to see the markets react, but when, that's the question we don't know. And as you can see, the price of oil is not doing anything right now. You would think that the price will be exploding right now based off everything that we're experiencing, but it's not. So markets is patiently waiting. So as of right now, I'm not looking to trade CAD JPY. Like I said, it can shoot down, but this is a market that I'm not really interested in because I'm unfamiliar with oil and how it's going to move based off what's going on right now. So I won't even put myself in that position. Like I said, as of right now, EJ is I think is going to be my bread and butter when it comes to currencies. I tried to make this video short, but it's just too much great information. So if you stuck this long, I appreciate it. When it comes to gold and silver, geopolitical uncertainty, trust weakening in the government, we're in a risk-off asset, buys. Plain and simple. Everything that I said in this video points in the direction of silver and gold actually performing really well, like how we did. I don't know if we're going to move like how we did in 2025, but that would be great if we do. But other than that, I do have positions open on gold and silver. I have one trade open on silver, and I think I have 4 trades open on gold. And as of right now, silver is just bullshit and pissing me off, but it still looks good. Like, structure still looks good. We've been shooting down majority the last 2 days, but you see how we just wicked off my entry level. So I could possibly see if we go down to a 4-hour time frame, you know what I'm saying? Like, I think that this was just, a pullback before the continuation back to the upside, and kind of the same thing when it comes to gold, right? I feel like this trade was really well. Like, we got the break above the previous high. We came down to retest. Once we came down to retest, I entered, and I think that we can continue to see this push up, to hit that 5,000 mark that everybody been talking about. So that's pretty much it, guys. If you haven't seen this video right here, the US, Canada, Eurozone, I went over the data that we got this week. So go ahead and check that out. And again, if you made it this far in the video, I appreciate it. And like I said, moving forward, I will continue to do my macro I can my macro videos in slideshow form, so it could be easy, smoother, cleaner, and yeah, we just go from there. All right, so I see you guys in the next video. Peace.